I'm Nuris Malia binti Muhammad Safi. For this slide, I will explain the concept of payroll and why it is an important area in an organization. Payroll refers to the systematic process by which an organization calculates, records, and pays remuneration to its employees for services rendered during a specific period. This process included not only basic salary and wages, but also authorized earnings such as allowances and overtime. At the same time, it takes into account statutory deduction, for example, EPF and SOSO, before the final net pay is made to employees. Because payroll involves a high volume of routine and repetitive transactions, it is considered a high-risk area. If payroll is not properly controlled, it can easily lead to error, fraud, or non-compliance with law and regulation. Therefore, effective payroll control are essential to ensure that employees are paid accurately, on time, and according with legal requirements. The auditor of payroll and personnel cycle focuses on examining an organization procedures related to employee and payroll activities. Firstly, auditor will check the process of hiring and authorizing employees. This is to make sure that only approved and valid employees are included in the payroll system and to prevent payment to fictitious or unauthorized employees. Next, auditor review how the organization recording time work, such as attendance record or timesheet. This ensures that employees are paid only for the actual hours worked. Then, auditor examining the process of calculating salary and wages. This includes basic salary, overtime, and allowances to ensure that the amount are accurate and correctly calculated. Finally, auditor check the process of payroll payment and statutory deduction such as EPF and SOSO. This is to ensure that payments are made correctly and that the organization complies with legal and regulatory requirements. So overall, this part shows how auditor evaluate whether payroll transactions are properly authorized, accurately recorded, and legally compliant.
Hello everyone. In this video, we are going to talk about management assertion related to the cycle, which are very important in accounting and auditing. Management assertion are claimed by management that financial information is recorded correctly. Auditor use this assertion to check whether financial records are reliable. The first one is classification. Classifications mean transactions are recorded in the correct account. For example, the expenses should not be recorded as asset. The next one is occurrence. Occurrence is ensured that recorded transactions are actually happen and related to the business. This helps prevent fake or duplicated transaction. The third one is completeness. The completeness means all transactions that should be recorded are included. Nothing important is left out of the financial record. The fourth is accuracy. Accuracy ensures transactions are recorded at the correct amount. This includes correct calculation, price, and total. The final one is cut-off. Cut-off means transactions are recorded in the correct accounting period. This prevents income or expenses from being recorded too early or too late.
Next, audit objective related to assertion. Firstly, occurrence. The objective of occurrence to ensure that salary and wages are paid only to genuine employees. That means auditor want to confirm that the employees actually exist and that the services are truly performed, to prevent payment to fictitious or ghost employees. Second, completeness, accuracy, and authorization. For completeness, auditor check that all payroll expenses are fully recorded in the accounting records. For accuracy, they ensure that salary, wages, and deduction are correctly calculated. For authorization, auditor confirm that payroll transactions are properly approved according to company policies, such as approved salary rate and overtime. Third, completeness and accuracy of payroll liabilities. This objective focuses on payroll-related liabilities such as EPF, SOSO, and PCB. Auditors verify that these liabilities are completely and accurately recorded so that the company does not understate or overstate its obligation. Finally, cut-off. The cut-off objective ensures that payroll expenses are recorded in the correct accounting period. This prevents expenses from being recorded in the wrong month or year, which could misstate of financial statement. Class of transaction is for payroll, and the account related about this about the payroll cash, all payroll expenses account, all payroll withholding account, and all payroll accrual account. For first, human resource and employment. The first business function is human resource and employment. This function involves activities such as hiring employees, approving pay rate, promotion, and change in employment status. This is important because only authorized employees should be included in the payroll system, and only approved pay rate should be used. Document and record. The main document involve a human resource record, such as employee master file, appointment letter, and personal details. Other key document is the deduction and rate authorization form, which authorize salary rate, overtime rate, and allowances for deductions such as EPF, SOSO, and PCB. This document ensure that payroll expenses are valid and properly authorized. The second business function is timekeeping and payroll preparation. This function records the actual time worked by employees and prepares all payroll calculation, including gross pay, deduction, and net pay, to ensure that employees are paid accurately based on hours work or salary agreement. Document and record. The document used here include time records such as attendance sheet or clock-in data and job time ticket for tracking specific work activities. Payroll information is summarized in the payroll transaction file and recorded in the payroll journal or payroll listing. The payroll master file stores cumulative employee data such as total earning and deduction. The next business function is payment of payroll. This involves distributing salary to employees either through bank transfer or check. This function should be separated from payroll preparation to reduce the risk of fraud. Document and record include payroll check and direct deposit record, which show payment made to employees. In addition, payroll bank account reconciliation are prepared to ensure that payroll payment recorded in the system match actual bank transaction. Final business function is the preparation of payroll tax return and payment of tax. This function ensures that statutory deductions such as income tax and other payroll-related tax are properly calculated, report, and paid to the authorities. Document and record. Important documents include the W-2 form, which summarize employee earning and deduction, and the payroll tax return, which report payroll taxes to the government. This document help ensure compliance with tax law and regulation.
Hi, I'm Kuratu, and now we present the relevant accounts in payroll and personal cycle. First is payroll disbursement. Payroll disbursement in cash refers to the actual cash paid to employees after all approved deductions have been made. It represents the net salary received by employees. In payroll accounting, this amount is paid either through cash, check, or direct bank transfer. Auditors focus on payroll cash to ensure payments are made only to valid employees and are properly authorized. For example, an employee earns a gross salary of 3,000 ringgit. After EPF, SOSO, and PCB deduction of 500, the employee receives 2,500 in cash. Next is payroll expenses accounts. It is the total cost of employee services incurred by the company during the accounting periods. This includes gross wages, salaries, overtime, and employee contributions. Payroll expenses are recognized when employees perform works regardless of whether the salary has been paid. As an example, during March, a company incurs 20,000 ringgit in factory wages and 10,000 ringgit in office salaries. The total payroll expenses recorded for the month is 30,000 ringgit. The third account is payroll withholding accounts. Payroll withholding accounts refers to amounts deducted from employees' gross pay that the employee is required to remit to third parties such as tax authorities or insurance providers. These amounts are liabilities of the company until they are paid. For example, from an employee's salary of 3,000 ringgit, the company deducts 330 ringgit for EPF, 50 ringgit for SOSO, and 120 ringgit for PCBs. The total payroll withholding is 500 ringgit, which must later be paid to the relevant authorities. And the last account is payroll accrual accounts. It represents wages that have been earned by employees but have not yet been paid at the end of the accounting periods. This ensures payroll expenses are recorded in the correct periods in line with the accrual accounting concept. For example, at the end of December, employees have worked 3 days but will be paid in January. If the unpaid wages amount to 6,000 ringgit, the company records this as a payroll accrual at year end. This is the figure 20-1 accounts in the payroll and personnel cycle. The illustration shows that separate operating accounts for payroll are normally include officers' salaries and bonuses, office salaries, sales salaries and commissions, and indirect manufacturing labor. These accounts have the same relationship to accrued wages and withheld taxes and other deductions that is shown for direct labor. Now, I'm going to explain internal control in the payroll and personnel cycle. As all knows, payroll is a high-risk area in auditing because it involves regular cash payments and a large number of transactions. If internal control are weak, it may lead to errors or fraud such as ghost employees, unauthorized salary payment, or incorrect payroll expenses. Therefore, I will explain the 5 key internal control commonly applied in the payroll and personnel cycle. The first internal control is educate segregation of duties. This means payroll responsibilities are divided among different employees so that no single person has complete control over the payroll process. For example, the HR department handles hiring, termination, and employee records. The payroll departments calculate salaries and deductions, while the finance department processes the salaries payment. This control is important because it reduces the risk of fraud. If one person is allowed to create employee records and also process payroll payments, they could create ghost employees and receive salaries illegally. By spreading duties, errors and fraud become easier to detect. The second control is proper authorizations. All payroll-related transactions must be approved by authorized personnel before being processed. This includes approval for new employees, salary increments, overtime claims, bonuses, and employee terminations. For example, overtime claims must be approved by a supervisor before being included in payroll. Salary rates must be approved by management or human resources. Proper authorization ensures that payroll payments are valid and reasonable, and it prevents unauthorized or excessive payments. From an audit perspective, authorization provides assurance that payroll transactions are genuine and approved. The third internal control is educate documents and records. Payroll transactions must be supported by proper documentations such as employment contracts, attendance records, overtime forms, payroll registers, and payslips. These documents provide evidence that salaries are paid to real employees for actual work performed and at approved rates. For auditors, documents and records create an audit trail that allows payroll transactions to be traced from source document to accounting records. Without proper documentation, it will be difficult to verify payroll accuracy and detect fraud. The fourth control is physical control over assets and records. Payroll records and payroll systems must be protected from unauthorized access. For example, payroll systems should be password protected, access should be limited to authorized personnel only, and payroll files should be kept in secure locations. Bank accounts used for salary payments should also be properly controlled. This control prevents unauthorized changes to payroll data, manipulation of salary amounts, and misuse of company funds. The final internal control is independent checks on performance. This means payroll activities are reviewed by someone who is not involved in payroll preparations. For example, management may review payroll summary, compare payroll expenses with previous months, or reconcile payroll records with bank statements. These checks help detect unusual trends, errors, or potential fraud. Independent checks act as a final review to ensure payroll information is accurate and reliable. In conclusion, strong internal control in the payroll and personnel cycle help ensure payroll expenses are accurate, authorized, properly recorded, and protected from fraud. For auditors, effective internal control reduces control risk and allow auditors to place more reliance on the payroll system. Therefore, understanding payroll internal control is essential in planning and performing an audit. That's all from me. Thank you. The next presenter will explain the test of effectiveness of internal control.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Sakina binti Ahmad Saifuddin. Okay. This slide explains the test of control for the payroll and personnel cycle. The objective is to evaluate whether the internal control are properly designed and operating effectively in preventing and detecting material misstatement in payroll transaction. First, the auditor inspect approved appointment letter authorized by management. This procedure is performed to ensure that only legitimate and authorized employees are included in the payroll system. By performing this test, the auditor can address the risk of payment made to fictitious or unauthorized employees, also known as ghost employees. Okay, next, the auditor review payroll summaries and related approval document to confirm that payroll transactions are reviewed and authorized before payment. These include the approval of salary amount, overtime payment, and statutory deduction, such as EPF and SOCSO. This control to ensure that payroll expenses are processed in accordance with company policies and management authorization. Okay. The auditor then observes the payroll preparation process to ensure that payroll is prepared in accordance with established procedure. Observation help the auditor confirm that internal control are consistently applied through the period rather than only a specific point in time. Next, continue test of control. The auditor evaluates whether payroll duty are properly segregated among human resource, payroll preparation, and payment authorization. Proper segregation of duties reduce the risk of fraud, error, and manipulation of payroll record. Next, the auditor independently recalculate payroll for selected employees to verify the accuracy of gross salary, deduction, and net pay. This test confirms that both automated and manual payroll calculation are functioning correctly. Lastly, the auditor inspects access right to the payroll system to ensure that only authorized personnel can create, amend, and delete employees and salary information. This control to protect the integrity, confidentiality of payroll data. So, in conclusion, if the result of the test indicate the payroll control are operating effectively, the auditor can place reliance on the internal control. and consequently reduce the extent of substantive audit tests. Okay, next, substantive audit tests. This slide explains the substantive audit tests which are performed to obtain direct audit evidence on payroll transaction and balance. Firstly, the auditor recalculate gross salary, statutory deduction and net pay for selected employees. This procedure is performed to verify the accuracy of payroll computation and to ensure that salaries and deduction are correctly calculated. Next, the auditor traces payroll amount from the payroll register to the general ledger. This test to ensure that the payroll expenses are completely and accurately recorded in the accounting record. The auditor can compare current year payroll expenses with period. This analytical procedure helps to identify unusual trend or fluctuation that may indicate error on misstatement. Okay, continuous substantive audit test. Further analytical procedures are performed such as analyzing payroll expenses as a percentage of revenue. This allows the auditor to assess the overall reasonableness of payroll figure. The auditor verify payroll payment by matching payroll record with bank statement. This confirms that salaries were actually paid to employees and that payroll expenses represent genuine cash disbursement. Okay, lastly, the auditor confirms payroll liabilities with statutory bodies such as EPF and SOCSO. This ensures that statutory deductions are accurately calculated and properly remitted. So overall, this substantive procedure provide direct audit evidence to support the fairness of payroll, balance and expenses. Next, audit evidence. This slide explains the 8 audit evidence obtained in auditing the payroll and personal cycle. Each type of audit evidence support a specific management assertion and help the auditor form a conclusion on the fairness of payroll balance. First, payroll register. Firstly, the auditor examine the payroll register which contain detailed information on gross salary, deduction and net pay for each employee. This evidence support the accuracy and completeness of payroll transaction as it show how payroll amount are calculated and recorded. Second, employee master file. The auditor review the employee master file which includes employee detail such as a name, position and salary rate. This evidence support the existence and validity of employee to ensure that employee expenses, to ensure the payroll expenses related to the legitimate employees only. Third, approved timesheet. Approved timesheet are examined to verify the hour work by employees. This evidence support the accurate assertion as salary are paid only for work that has actually been performed. 4. Payslip. Payslip are reviewed to show the breakdown of gross salary, statutory deduction and net pay. This evidence support the accuracy of payroll calculation and allow the auditor to check whether deductions are calculated correctly. 5. Bank statement. Bank statement are examined as independent external evidence. They confirm the payroll amount were actually paid to employees, supporting the accuracy and completeness of payroll payment. Next, EPF SOCSO remittance form. Remittance forms from EPF and SOCSO are inspected to ensure that statutory deductions are accurately calculated and properly remitted to the relevant authorities. This evidence supports the completeness and accuracy of payroll liabilities. 7. Employment contract. Employment contracts are reviewed to confirm agreed salary term, allowance and benefit. These documents support the authorization and accuracy of payroll expenses. Last, management approval document are examined to confirm that payroll transactions are properly reviewed and authorized. This evidence support the authorization assertion and reduce the risk unauthorized payroll payment. So overall, the combination of internal and external audit evidence provide sufficient and appropriate support for the auditor to conclude the payroll transaction and balance are fairly stated and free from material misstatement. Thank you.
In this video, I will explain the possible misstatement that may occur in the payroll and personnel cycle. The first possible misstatement is ghost employee recorded in payroll. This happens when employees who do not actually exist or who have already left the company are still being paid. This actually occurs due to weak control over employee record and payroll authorization. The second misstatement is incorrect salary calculation. Error may arise from wrong pay rates, incorrect overtime calculation, or failure to update salary changes. As a result, payroll expenses and liability may be misstated. The next one is unauthorized bonus or allowance. If bonuses are recorded without proper approval from management or the board, the company may incur unnecessary costs and financial loss. Another possible misstatement is cut-off error. This occurs when payroll expenses are recorded in the wrong accounting period either earlier or later than they should be. Cut-off error affects the accuracy of expenses and liabilities reported in the financial statement. The last one is fraud. Manipulation of payroll data may occur. This includes altering payroll record for personal gain, especially when there is poor segregation of duties and lack of supervision. In this presentation, I will explain about past year question, which is January 2024 question 5, which focus on auditing payroll liabilities. Payroll liabilities are important because they are related to employee salaries, bonus and benefit, which are usually material in financial statement. The question states that are two major balance-related audit objectives when testing payroll liabilities. The first objective is accuracy, which ensures that payroll accrual in the trial balance are stated at the correct amount. The second objective is cut-off, which ensures that payroll and personnel transactions are recorded in the correct accounting period. The primary concern of this audit procedure is to ensure that payroll accruals are not understated or omitted. Based on the objective, the question requires us to describe the common test of detail of balance procedure for the following major payroll liability account, which is accrued salary and wages, accrued bonus, and the last one is accrued sick pay and other employee benefit. This section explains the internal control weakness related to payroll, their impact on the organization, and recommendation to rectify this weakness. The first weakness is that payroll accruals are not independently reviewed. This means that payroll accrual calculations are prepared by one person without any separate review. As a result, payroll expenses and liabilities may be misstated, either overstated or understated. To correct this weakness, the company should perform an independent review and approval of payroll accrual calculation. The second weakness is that payroll accrual policies are undocumented or inconsistent. This can lead to incorrect cut-off of payroll expenses between accounting periods. For example, salary earned at the end of the month may be recorded in the wrong period. The recommended action is to establish and document clear payroll accrual policies that are consistent with prior years. The third weakness is a lack of segregation of duties in payroll preparation and recording. When one individual handles multiple payroll functions, the risk of payroll error and fraud increase. To reduce this risk, duties should be properly segregated between payroll preparation, authorization, and recording. Another weakness is that accrued business are recorded without proper authorization. This may result in unauthorized or excessive bonus payment. To address this issue, bonus accrual should be approved by senior management or the board of directors before being recorded. The final weakness is that accrued sick pay and employee benefit are not regularly reviewed. This can cause overstatement or understatement of employee benefit liabilities in the financial statement. The solution is to conduct regular reconciliations and reviews of accrued sick pay and employee benefit. In conclusion, the payroll and personnel cycle is essential to an organization operation because it manages employee information and ensures that wages are paid accurately and on time. An efficient payroll and personnel cycle help improve operational efficiency, ensure financial accuracy, and reduce the risk of error and fraud. At the same time, proper payroll management contributes to employee satisfaction as employees are paid correctly and on time. Therefore, strong internal control over the payroll and personnel cycle are important for both the organization and its employee. That's all from us. Thank you.